Welcome to Law Days Lattes, the podcast where we blend the world of law and business with a warm cup of information and common sense. I'm your host, Sidney Whelan, attorney, real estate investor, and business owner. Each week, we'll be your go-to source for legal insights, business advice, and so much more. Whether you're a seasoned professional, an ambitious entrepreneur, or simply someone seeking guidance, we'll have you covered. From navigating the legal landscape to empowering you with valuable business strategies, we'll explore the legal side of life and enjoy a virtual latte along the way. So, grab your favorite latte, get comfortable, and let's dive in to Law Days Lattes. Hello, and welcome back to Law Days Lattes, the podcast where we talk about law, business, wealth, and legacy in a way that actually makes sense. I'm your host, Sidney Whelan, founder of the Whelan Law Firm, serving North Central Missouri businesses and families in 3 convenient locations, Moberly, Carrollton, and Paris. As an attorney and entrepreneur, I'll be your guide through the legal strategies that help you build it, protect it, and pass it on. Grab your coffee, or maybe your latte, and let's talk about something that came up multiple times in my office this week. I had not one, not two, but several business owners call or come into my office saying essentially the same thing. My tax preparer told me I need to set up an S-Corp. And every time, my first response was the same. Okay, but what kind of company are you actually trying to form? Because here's one of the most common misunderstandings I see among business owners. An S-Corp is not a business entity. Let me say that again. An S-Corp is not a business structure. It's a tax election. That distinction matters a lot. And if you're starting a business, growing a business, or restructuring your business, understanding this can save you money, reduce your headaches, and help you build a stronger foundation. Today, we're talking about the difference between LLCs and corporations, the pros and cons of each, and where the S-Corp taxation fits into the picture. So let's jump right in. First, business structure and tax structure are not the same thing. One of the biggest mistakes people make is confusing legal structure with tax classification. Those are related, but they're not identical. When you form a business, you are making 2 separate decisions. The first decision is, what legal entity am I creating? Your options might include a sole proprietorship, a partnership, a limited liability company, sometimes called an LLC, or a corporation. Then comes a separate question. How do I want that entity taxed? And that's where things like default taxation, partnership taxation, C-Corp, or S-Corp taxation. That's where things like default taxation, partnership taxation, C-Corporation taxation, or S-Corporation taxation all come into play. That's why someone can say they have an S-Corp, but what they may actually have is an LLC taxed as an S-Corp, or a C-Corporation taxed as an S-Corp. Those are not the same thing legally, and if you don't understand the difference, you may be making decisions based only on tax advice while overlooking legal consequences. That's where I encourage people to widen the conversation, because your business is not just a tax return. It's an asset, and it may become a source of wealth, income, opportunity, and eventually legacy. So let's talk about LLCs first. For many small businesses, the LLC is the go-to structure, and for many good reasons. An LLC is popular because it combines liability protection with simplicity. That word, simplicity, is one of the biggest advantages. In Missouri, forming an LLC is relatively straightforward. You file articles of organization with the Secretary of State's office, choose a registered agent, prepare your operating agreement, and largely you're up and running. Compared to corporations, there are fewer formal requirements. Usually no board of directors or shareholders meetings, no formal stock issuance, no mandatory corporate minutes in the same rigid sense. That makes LLCs especially attractive for solo business owners, husband and wife businesses, family-owned companies, rental property ownership, service-based businesses, and many newer entrepreneurs. And I'll say something that may surprise some people. For many businesses, especially in the early years, simple is not a weakness. Simple can actually be powerful. It reduces friction and allows focus. Simple allows you to spend more time serving clients and generating revenue. But simplicity has a downside. Too many people treat an LLC casually. They form the entity and then ignore the operational discipline needed to preserve liability protection. For instance, they never sign an operating agreement. They commingle personal and business funds. They fail to document ownership. They use the company bank account like a personal wallet. And that creates risk. Here's something I say often. Simplicity should never mean sloppiness. An LLC still requires discipline. The legal protection only works well when you respect the separation between you and the company. Now let's talk about corporations. Corporations are more formal, more structured, and sometimes more appropriate. When you form a corporation, you're entering a more rigid governance system. Typically, you have shareholders, directors, officers, bylaws, resolutions, and formal procedures. That sounds like more work, and it is. But structure has value, especially when the ownership gets more complex. Corporations often make more sense when multiple owners are involved, or outside investors are expected, or equity compensation is planned. Sometimes it makes more sense if succession is complex, or if capital raising is part of the strategy. If you're building something with serious scale in mind, corporate structure can offer clarity and predictability. In other words, corporations create structure, but structure comes with maintenance. And yes, the maintenance matters. You need good records, good governance, good documentation, good legal housekeeping, because the more valuable your business becomes, the more important those details become. Now, let's bust the big myth. The S-Corp. This is the part where people often get confused. So, let's bust the myth. There is no S-Corp company that you form at the Secretary of State's office. You do not file articles of S-Corporation. You do not create an entity called an S-Corp. Instead, you create a legal entity, usually an LLC or a corporation, and then you may elect S-Corp taxation with the IRS. That election changes how income is taxed, not how the business exists legally. That's why I keep repeating this. S-Corp is a tax election, not a business structure. So why do people care so much about S-Corp taxation? Usually for one reason: taxes. More specifically, payroll tax. Here's the simplified version. If you operate a standard single-member LLC, business profit may generally be subject to self-employment tax. With S-Corp taxation, the owner typically pays themselves a reasonable salary through payroll and then may take additional profits as distributions. Those distributions may avoid some payroll taxes, and that can create meaningful savings. And yes, that can be powerful. But this is where people get overly excited. Because S-Corp status is not automatically better, it introduces some complexity. Now, with an S-Corp, you may need to set up payroll filings, additional accounting measures, tax compliance, and you may potentially have higher CPA fees. And the IRS has one phrase that they care deeply about: reasonable compensation. And that phrase matters. If your business makes $300,000 a year and you pay yourself a salary of $20,000 while taking massive distributions, you may be inviting some tax scrutiny. The IRS expects owners who actively work in the business to pay themselves a reasonable wage for that work. So S-Corp planning needs to be thoughtful, not simply aggressive for the sake of saving a few dollars. So which structure is best for your business? This is the question everyone asks, and the answer is, it depends. I know, that's the lawyer's answer, but it's true. An LLC may be ideal if you're starting out, if you want some flexibility and simplicity, if ownership is straightforward, and compliance burden matters to you. A corporation, however, may be better if you plan to scale aggressively, if you want investors, if ownership will become complex, if governance matters to you, and if equity structure matters. And S-Corp taxation may make sense for either the LLC or the corporation if profits have grown, cash flow is consistent, and the tax savings justify the added compliance cost. Notice what I did not say. I did not say there is one best structure, because there isn't. There is only one best structure for your goals. So, some final thoughts. I want to leave you with this. Your CPA and your tax preparer are important members of your team. Tax strategy matters, but tax strategy should not be the only strategy. Too many people ask, how do I pay less tax? That is not the first question I would ask, however. I would ask, what are you building? What risks are you carrying? What assets are you creating? And what happens if you get sued? What happens if you bring on some partners? What happens if something happens to you? What happens when it's time to exit? Because your business is not just income. It may become one of the most valuable assets you ever own. That means your business deserves more than just a quick tax decision. It deserves intentional planning. And that brings us back to what we talk about so often here. Build it, protect it, and pass it on. Build with wisdom, protect with strategy, and pass on something of value, because stewardship is important. The things you build, your business, your wealth, your legacy, deserve thoughtful structure, and sometimes the right legal foundation can make all the difference in the world. Thank you for joining me today on Law Days Lattes. If this episode helped you, please share it with another entrepreneur, business owner, or professional who needs this conversation. And if you're evaluating a new business structure or wondering whether your current structure still fits your goals, we help clients with exactly that. Until next time, keep building wisely, keep protecting what matters, and keep creating a legacy worth leaving. Have a great week, my friends.
This podcast episode contains general information for discussion purposes only. Each case is different and must be judged on its own merits. Missouri rules generally prohibit lawyers from advertising that they specialize in particular areas of the law. This show should not be construed to suggest such specialization. Nothing on this show should be taken as legal advice for any individual case or situation. This information is not intended to create an attorney-client relationship, and the listening or viewing of this podcast does not constitute an attorney-client relationship. The choice of a lawyer is an important decision and should not be based solely upon advertisements.